Your number one priority is to protect the deal, the asset itself. When you're in this multifamily or when you're in this syndication game long enough, you're going to find God, because you're going to pray. You're going to pray so many times, like, oh my God, like, oh,
Help
please.
me.
Like, you got to be really, really creative. And the only way you can be creative, like truly, is to meet as many creative people as possible.
Hello, everyone. Welcome to another edition of Ask the Multifamily Expert. And today is a very, very beautiful day. We're having a very exciting conversation with Alex Lovely. I'm sure I butchered your name, Alex, but don't worry. You have the
That's good.
opportunity to reintroduce yourself to the audience again. So, we're also streaming on Facebook. Some people are here live. It's an opportunity for people to ask questions and get answers directly from experts on this event. But regardless, if they don't ask, I'm going to ask you questions, and definitely they will benefit from such conversation. So today, I'm going to give us a background on what we'll be discussing today. We'll be discussing how we can navigate the market shift. There's a lot of things happening in the market. Every day when you wake up is a new news, it's something that's going on. There's a new thing happening, and you're like, you've not even gotten a hang of the federal court. We are dealing with tariff, and now we're also dealing with the US debt. So many things are happening, and in a very funny way, they're all affecting our deals, either positively or negatively. So it's very important that as operators or asset managers, we always look at the macroeconomy because it plays a very big role in how our property performs. So we'll be discussing how we can adapt to changes in the economic condition. And there's no other person I would love to discuss this conversation with than Alex Lovely. I want you to tell us who you are and how you started your multifamily journey. So we're here. We'll just sit down and relax and enjoy while you speak.
Yeah, sounds good. So, a little bit about me. First of all, I've been in the real estate game since I was 18 years old. I always want to say 18 because that's when I picked up Rich Dad Poor Dad, right? So, for most investors and anybody that's actually in the real estate industry today, probably have picked that book up and started their interest in this industry from there. Wanting to buy assets and not liabilities, understanding the balance sheet, understanding passive income, and keeping money, and how real estate provides so much have tax laws that really help us keep our money rather than giving it to the government. So I started when I was 18. I bought my first property when I was 23 years old. I bought a triplex, and then I got kind of lucky. It was after the 2008, 2007 crisis, so I learned a little bit about that, but I didn't really experience it. I just caught the tail end of it, which is important for the conversation we're going to have today, because I caught the recovery period of that market downturn, right? So I bought this triplex right during that time. Within a year and a half, my property went from $200,000 to $660,000, in which I took a refinance out, opened up 2 restaurants, and actually lost everything. I lost my house, my restaurant, cars. I don't know why I got into that business, but it was just to kind of prove myself or something like that, that I thought I was a good businessman and all that, and got into a business where I knew nothing about it. So the biggest part of all of that is mentors, right? I didn't have any mentors in any of those beginning areas. So I lost everything. And then when I found another mentor, Chris Crone was actually the person that kind of got me back into partnerships and like, okay, you've lost everything, you're $400,000 in debt, and how do you get back into the real estate game? I thought there was no way I can climb back out. So I learned partnerships. Oh, I can leverage other people's money because I have experience. Although I have experience of some success, but also failures, I understand both of those are very valuable, right? So I got somebody to invest with me for the first deal coming back. It was an Airbnb deal. It did really well. They told their friends, and I had a really great referral program, which got me from literally 1 property to 20 in like 9 to 11 months, something around that time frame. And then I just started to build up investors. People wanted to invest with me, but I didn't have any more capacity to be able to do any more single family. So I had to go into something bigger. That's when I discovered commercial real estate. I was like, oh, I can bring people together. I learned how to do syndications. I learned that from being at a 10X event with Grant Cardone, and I was in his mastermind for a while. But I met my partners there. The most important thing was the partners that I met there, and I got into commercial real estate. So we bought our first storage, industrial storage deal where I got all of my investors, which was about $700,000 pent up of money to put into one deal. And it was an awesome deal. Even today, it's still cash flow and we still own it. And then from there, just kept going. And in about a year and a half, had about 800 units under my belt. And that's when we kind of started hitting that period where interest rates skyrocketed and jumped. So in the last
Yeah.
2 years was the year of operations. We didn't purchase anything. We just needed to operate through this time in the market. But I really learned a lot about lending. And that's how I got to where I am today, where I'm in the game of lending. I'm running and managing a $4 billion debt fund, and I'm able to actually acquire real estate through debt. There is so many deals that are in serious trouble, and you're able to actually pick up real estate deals for really, really inexpensive. You can buy a $75 million deal for $50 million with $5 million down. These are things that are available today, but you have to learn everything. And like you said, understanding the macroeconomics will help us make better decisions. A lot of people right now are saying, oh, I'm going to wait until the market stabilizes. I'm going to wait until interest rates come down. That's not the time to be buying, right? The time to buy is during this time of uncertainty. If you can bring certainty and clarity to uncertain times, that's where a lot of the opportunities lie. So we can definitely talk about market shifts
Yeah.
and where we are.
Thank you so much for giving us an in-depth of who you are. So I would like us to dive into some question and answers. For the audience, if you have any pressing question, please, we have a Q&A button. You'll see it on the screen. You can go in there and type it. Or if you feel you're not shy, you want to speak directly to Alex, you can also raise your hands and I will invite you to the panel to ask your questions directly to him. And for those of you that are not subscribed to our YouTube channel, we have a lot of content on our YouTube channel. We are constantly monitoring the market. Right now, we are having a conversation on the US debt, and not just that, everything happening in the macroeconomy, both from China, from Ukraine, the war that's happening. We are discussing them and we are giving you solutions on how you can navigate your multifamily business. So if you've not subscribed to our YouTube channel, I will assure you that you are missing a lot in that. You can also subscribe to our Facebook, official BBO Fury, and our Facebook group is Blue Ocean Multifamily Group. And on LinkedIn, I'm BBO Fury. So you will see content on anywhere you decide to follow us on. So there's no excuse. So take out the time and just go right now and subscribe. So now let's dive into the question. I'll be asking you something around market condition and strategy, because you just mentioned it when you were talking that operation has become very key. Before now, you could afford not to do anything in a property and you go 1 year after and flip it and you will make profit. But right
Yeah.
now, that is not the case. You have to actually perform, be active, do the job for that to even happen. That is if it will happen, because we've seen deals that even after all the good performance and all that, they're still underwater. My first question to you is, how have the recent economic changes impacted the multifamily real estate landscape? How do you think that has affected the landscape right now?
I mean, it's very obvious for those of us that are in the space, right? If you own any deals, whatever your property was worth 2 years ago is not what it's worth today on paper, right? Not that it's not really worth that, because it can still generate the income, but on paper it's worth less because of really it's just what it's dictated by lending. So it's dictated by what the banks say your property's worth, because that's how much they'll lend to you. But making it through this time, that's going to change as interest rates change and all of that. So, a very easy example for people to understand is, think about 2 years ago when you bought a property at $10 million, right? The bank gave you $7 million because the interest rates was lower, and your income supported that 1.25% of $7 million, whatever the interest rates were. But now, fast forward to today, right? Your loan, the same loan is due, but now the interest rates are higher. So according to the bank, and the ability to service that debt is now lower. So the bank says, hey, I know you owe us $7 million, but now the time is due. We can refinance you, but we can only give you $5.5 million, right? Now, in order to refinance, you have to cash in $1.5 million, not because anything happened to the deal, but just because interest rates went up and the ability to be able to afford the deal and service the loan has changed. So that itself has really changed the environment of commercial real estate. Now, think about that deal times 10 in size, $100 million deal, right? Equity is tight. A lot of people are losing money in their investments. They don't have access to liquidity. Banks have kind of been pencils down because of uncertainty. It's
Yeah.
I feel like a lot of this is, they're I think all of them are really in cahoots with each other. There's a transfer of wealth that's happening, and they want to take it
Hmm.
out of the people's hands and put it into whatever, BlackRock, big funds, big banks, whatever you want to call it. But in order to refinance, and people may say, oh, why do you need to refinance? Commercial loans are shorter. They're shorter in term. They're 3 years, 5 years, 7 years. Like it's not a 30-year. That's why you don't see the residential market being impacted as much because you can sit there with a 3% interest rate and just make it through today's market. Commercial real estate is not the same. Your loan is coming due. If you get an extension, your loan jumps from your original fixed amount to whatever is adjustable variable today. All of a sudden, you're paying $500,000 in debt payment and then it jumps to a million. It's impossible to service that. So you have a lot of real estate operators and deals that are operating in the red now, right? They're paying in thousands of dollars or tens of thousands of dollars every single month to keep the deal alive. And there's not really a place for them to, there's no salvation at the end of the road because unless interest rates somehow magically drop, everybody's kind of praying. So what can we do in today's market is you have to figure out a solution, and I believe the solution is going to come from private debt. There's going to be international money that will actually be cheaper than what your banks are going to be offering. They're going to give you better terms. There's different motives behind why they're lending versus what the banks are doing. So I think in this period, there is going to be this transition from, going with your CMBS loans, your Fannie Mae, Freddie Mac agency type of loans, which are all playing on the same side over here versus the private debts that are coming in that will offer better terms to be able to save the deals, so to say, right? You want to extend. If you can survive through this period, over the period of time, your deal is going to make money. It's going to be worth more. Valuations will go up. Cash flow will go up. That's going to be natural, but we have to survive this period for anyone that currently owns deals. Now, if you're on the acquisition side, this is the time to buy as everyone else is, struggling and all the uncertainties are happening. You're able to pick up deals at a discount.
You just drove right into my next question. So
Great.
now, how do you balance short term? Because you said in the short term, we can start thinking of partnering with equity people like you that do those kind of thing, equity partners and all that. Because regardless, we always know that the Fannie Mae loan, the agency loan, typically will give you a lower interest rate, although the process is ridiculous. It's rigorous as well. But we know that if you can get that, that might help, but it will require you to go get equity for you to close on those deals. But
Mhm.
right now, you are saying that you can actually survive this entire terrain by just working with people like you that have hedge funds and funding your deals and all that. Is that a long-term or a short-term goal? How do you classify that and balance it up?
Well, I say that that is your overall goal because these types of solutions are relationship based.
Yeah,
Now that I'm running a $4 billion debt fund, I'm looking at the relationships of the operators. I'm looking at
right.
90%, I'm looking at the people that I want to help. And that is, how do they look on social media? What did people say about them? That's why it's so important to always keep an integrity all the time and then also be presented in a way that people like, right? Then you're going to look at your schedule of real estate. Have people complained about you? All of these things matter even more than deals right now because we know the
Mhm.
deals are fine. The deals are good. They're going to be good. We just need a lifeline for a lot of the deals. So for me, if you have seen, like, I had 4 deals that are in trouble. Okay, same thing.
Yeah.
Negative cash flow every month because our interest rates went from 5% to 10 or 11%. We can't refinance. We refinance into a 7 or 8%. We need to cash in, and we've already been negative cash flowing, and us as general partners have been, fronting that bill. The last year I sold so many houses of my own just to cover some of the shortfalls, and it was
Mhm.
it was tough, but I didn't give up. I kept going out. I looked for solutions. I was underwriting my deals. What would it take? for me to keep this deal. Your number one priority is to protect the deal, the asset itself. Don't lose the asset, right? Don't worry about anything else. Just don't lose the asset, because that's when you lose everybody's money. If you can keep the asset alive and your returns might be smaller, that's okay. Protect the asset. So I'm looking at different solutions. Okay, if I need $1.5 million, if I need $10 million for a refi, how do I get that? If I can't get that, how do I get more of leverage on the loan? If I can't get that, how can I get in, bring in another partner? How can I recapitalize the deal? Can I have somebody come in and repurchase the deal, and maybe we'll give some seller finance so that everybody kind of stays whole, right? You got to be really, really creative. And the only way you can be creative, like truly, is to meet as many creative people as possible. Talk about your issues, talk about the challenges that you're facing, and see who's got solutions for you. There's so many people and so many conversations that I've had that opened my mind up to new possibilities. And
Mhm.
from there, I kept searching for solutions, and I found one. And they looked me up, right? They looked me up. For the past 4 years. I've dedicated myself to serving communities and teaching people and running deals and teaching A Course in Miracles. And they looked me up, and it's 4 pages of Google of just things that I do and who I am and all that,
Yes.
right? And they're
Yes.
like, that's awesome. We'll support you here. What do you need? And so I got a loan for all of our deals that I couldn't get anywhere else, that survived. I was going to lose a deal, and instead I got a $1 million injection because they were able to structure something for us with CapEx and all of that, second position. Now, equity's not diluted, but returns will be extended. We initially projected 2x in 5 years. Now it'll probably be 2x in 8 years. But
Mhm.
that's a conversation you'll have with your investors, right? And they may not like it right now, but they sure as heck gonna like it more than losing the entire principal, like a lot of deals that we've seen out there, right? So
I have
it's
a,
just
I have a
relationship
question
based.
for you. Yes, just made mention of something that's very critical. One of the reasons why I said I need to invite Alice to podcast so that we can have a conversation was because you've been consistent, especially in the religious part. I am a Christian, so when I see someone in that line and also doing businesses very well, I kind of get attracted to that person. So from afar, I think someone like me, I've been watching you to see your consistency. So what you said is actually correct. You don't know who is watching, you don't know who is looking at you. And definitely, if you're doing the right thing, you have integrity and you're consistent, you should be able to attract the right people to you and all that. So I just want to let you know that. Let me jump to my next question. Because of what you said you need to protect the deal and ensure that you don't lose it because you lose the investor's money. I've seen cases whereby you really cannot save that deal. So my question to you is, at what point do you let go? Do you still keep saving it because you just want to save it? When do you let go?
Well, there's a point where you cannot inject any more equity into the deal, right? You can always take on more debt, but you can't inject any more equity. Once you inject equity, it starts to dilute your initial investor's money. And that's just pushing the can down the road because there's no solution. So if you can no longer inject any more capital into the deal, you have to think of something else, right? So for me, I went through that. Worst case scenario, we lose the deal. How do I make everybody whole? You know what? I'm going to create a new fund. I'm going to put all of these investors into that fund. And the next deal that I go into as part of my own position, I will put them in there from my equity in the deal. So I know that in my heart, no matter what, even if we lost money on this deal, I will fight to make it whole, right? Not everybody will do that at the expense of
No.
myself or my money. I will do that. And so I've already prepared that conversation and I've shared it, on one of my calls. I'm like, I think we may lose this deal. But what I'm going to do is all of your equity that you guys lose, I will create a new fund, with myself, and in my new deals moving forward, I will keep creating equity for you guys until you guys are made whole, right? Like that's me though, right? So that
Yeah,
helps
that's
me sleep at night.
That's really fantastic. I don't see people doing that. And let me tell you why. I invested in my friend's deal and I did it because of friendship, not because I was interested in the deal. I invested in a deal and come 2 years later, the same thing happened. She was in a floating rate. The
Mhm.
interest rate went up. She could no longer hold on to the deal. And the best advice that people gave to her was, you need to sell. She actually lost $5 million of that deal. But I think what got investors actually upset was not because they lost the deal, but because of the emotion that she attached to it. She was so like cold-blooded. She didn't even care. It was like, it is what it is, guys. We
Yeah.
have to sell. We lost it. There was no compassion in it and all that. And I remember on that day, people were on the call and people were really, really upset. And let me tell you for a fact, she will never ever do multifamily again. Nobody will ever believe in her any longer
Mm.
because of the way she went about it. So versus how you decided to handle yours, you said you actually had to carry your investors along and you even put them on your hedge fund, and definitely they're going to benefit from it. And if possible, even more than what you had even projected on the last deal for them and all that. I would like to say that it's not everyone that is doing exactly what you're doing. Some people don't even care. Do you like to respond to that?
So I think, something like this happens in the market. It's a cleansing, right? There's a lot of people that don't belong in this market. They don't, you
Mm.
don't, a lot of people don't belong managing or investing other people's money, right? And a lot of those Wall Street guys are kind of the same. That's why they create such a distance between their investors and them, because they can just say money's gone and they can sleep at night. But
Mhm.
for us that are in this game, you have to understand how hard people work for their money and the magnitude of the responsibility that you're taking on by saying, hey, invest in this deal with me. They are not investing in the deal, really. They're investing in you, in this relationship. If you don't hold that sacred, you probably don't really belong in this game. And the market
Mhm.
will tell you. Life will tell you. Life will give you, will knock you back to where you're supposed to be. Like, so maybe the syndication world is not what you're supposed to be doing, right? Because it's the energy behind all of it. We didn't end up losing the deal. Like I said, we saved it. But so much of it, it's to help me sleep at night. Like, this is not an easy game. A lot of people, and you probably know this, as we raise capital for a deal, there was a point that I took a $350,000 loss, and we had other general partners that came in for the EMD, and I paid everybody back. I took a loan out just to pay everyone back because I care more about relationships than about money, right? If you care about money, you'll have some money. But if you care about relationships, you will
You
have
go.
constant flow of it, which is, people, for your own benefit, people should be caring so much about relationships.
Yeah, so my next question to you is, as a GP, how do you feel that people should communicate to LPs during period of financial uncertainty? What do you think they should be telling the LPs at that time?
So there is a fine line be, of giving too much information, which creates chaos and worry and a lot of injection, versus when you are ready to tell, being authentic, being vulnerable, which is the way that you should communicate in life all the time anyways, right? Just be real, be authentic, be vulnerable. Look, this is what's happening. Tell the truth. The truth is, over a period of time, people will respect that. People will respect authenticity. People will respect vulnerability. People will respect the truth. It may not feel good in this moment, but it allows you to not have to carry all this with you for the rest of your life because, you were able to tell the truth right there. But
Exactly.
people once you tell a lie, or I've heard people losing their deals and they don't even tell their investors for like 2 or 3 months. And then I have a friend who invested in a deal with a really big person who supposedly is like, a guru in the game. They lost the deal, and 2 months later, my friend found out that their deal was lost. They couldn't even get in contact with somebody. I've invested in a couple of deals where I can't even get in touch with the GP. I haven't seen anything. I don't know what's going on. The newsletter says everything's good, 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 and then all of a sudden it's a capital call, and I'm like, all
That's
right.
very nice.
I'm trying to, like, figure out what's going on. There's multiple deals. Like, I'm in a couple different deals as a passive investor. But what I found out was, in this game, I will invest in my deals. Like, I don't, in the future, people that I've worked with that have been GPs with me, yes, I will surely invest with them because of watching how they're operating now, and that they've gotten a chance to see how I've operated. And I think value is really important in how people operate. It's not
You
a it's
also
not a systematic thing. It's a value that comes from inside you.
You are so right about that because I invested in three people's deals and only one, and that one is not a multifamily, it's a triple N. That's why we're getting kind of returns we were getting. But the other two, no, nothing from them. Now I'm doing my deals and my deals are cash flowing because it takes us time to go through that route. before we even say we want to do the deal. So it's really a difficult call. For the audience, for those of you that are listening, I wouldn't like to sugarcoat this. The multifamily space can be bloody, it can be messed up, but there's still some right or good people around. All you need to do is to vet them and know which of them aligns with you and see what they've been doing. And let me also tell you, don't go by how long the person has been on the market, has been in the industry. For this period, there's a place for experience. Okay, I've been in it for maybe 20 years and all that. Yes, that's good. But that should not be your final judgment call for you to
Mm-hmm.
say, okay, this is why I want to invest with this person. No, go more in depth to find out how the deals are performing. How do they treat their limited partners? You heard from Alex saying that is even in some deals that he doesn't even know the GPs. You don't want to be in those kind of deals, for crying out loud and all that.
Yeah.
So please, we are trying to open up the canker worms for you to know exactly what multifamily is, but that is not a judgment for how it is generally. We still have some good guys out there. Someone like Alex is
There are
one of them.
so many
Yeah,
good. There's
so
good
many
people.
good guys, but the bad ones are actually messing up things. So you just need to be very careful to know who you're sleeping in the bed with. Now we're going to go now into operations because that's how we started this conversation. Now, what are the most effective way to preserve cash flow during uncertain times? The thing is, do you even have cash flow for you to say you want to preserve? So now let's assume we have. What are the ways you think people can preserve their cash flow?
So, first of all, I think the most important thing for anybody doing anything is peace of mind. Okay, so do you have peace of mind when you are investing with somebody? And then for us, when we're taking down a deal in acquisition, peace of mind looks like having a lot of cash reserves. When you raise a lot of cash reserves up front, your returns for your investors go down. So I'm not pleasing my investors. I know what could potentially happen. So all of our deals have a lot of cash reserves, and this is why we've been able to survive. In
Mhm.
times like this, you run out of time or you run out of money. This is the way you lose your deal. Okay, you run out of time or you run out of money. We did run out of time, right? It jumped up, but we had the money to be able to carry forth. We were able to extend, we were able to, continue carrying forth, right? Many months, even though we were operating negative, but that doesn't lose the deal for us, right? It just gives us some time to figure out solutions, which is all I've been doing for the last 18 months is figure out solutions. Now, you definitely want to stop distributions if you're in the red. I know people that are still doing distributions and I know their deal's not cash flowing. There is no freaking way it's cash flowing, but from the front end raise, they're still doing distributions to keep up the looks. And that's the faster way for you to lose the deal. People go from cash flow to lose the deal,
Mhm.
right? And there's some big players out there. I have no idea how they're cash flowing deals. I know they went adjustable going in. They went variable, right? It was a bridge loan into let's ramp up the income and then refinance and then give investors a whole bunch of money back, right? All of those deals in bridge cannot possibly be cash flowing.
Right
So
now.
they're still distributing money. It's kind of like a looking good conversation and having the inevitable and just pushing the inevitable. But for me, like immediately when all of this happened, I was like, hey guys, distribution's gotta stop. Hard conversation. People were upset. People were, like whatever happened, but I'm staying the course to keep the deal alive. My experience is peace of mind. Okay, we need the cash here. And if we did nothing, this cash will at least keep us alive for 10 more months. 10 months is a lot of time to be able to figure something out. But if you
Right.
start distributing, you got 3 months now. You got 2 months now,
Or
right?
none.
So, that's one way. And then again, I think the solution a lot of times lies in having these conversations with other experienced operators. Also being on like Zooms and webinars like these where you get to hear other people like how they got through it. It's very
Mhm.
important. If you're looking for solutions, you got to actually be looking, right? You got to be in all the places you can be to hear all the experts. Something's going to land for you.
Mhm.
And I've heard, for me, I was in another room. I was in another mastermind on operations. It was Robert Martinez's mastermind. That's the only mastermind currently that I'm a part of because it's focused on operations. He's one of the best operators I've ever met. There has been so many things that I've heard that he's done with his deals that gave me the idea to do it for my deal, right? I didn't know that what we could do with taxes and insurance and how to get them lower and he did it and then we follow suit through and we did it and it saves 15%, saves 20%. Every dollar counts when it comes to operating these types of deals because it's the multiplier. Just like it counts when you're gaining, it counts when you're also reducing, right? So if you're increasing your income or if you're reducing your expenses, they multiply by like 16. Every dollar is like $16, right? So it's like it matters. Every single thing matters. Little fees in matters. How do you collect rent more efficiently matters. How do you not have turnovers? Turnover is going to be your most expensive expense, right? In that expense column. How do you prevent that? Right? Some people really want to increase rent, so they're not like giving incentives to renew. Well, in these times of uncertainty, I am not concerned about increasing rents at all. I want you to stay there and sign another 6 month, 12-month lease with us, right? I don't need turnovers while I'm trying to figure out solutions for the deal. I want everything to
That's
stay put over here. And so we offer incentives. Hey, if you do, a 12 lease, if you sign it right now, we're going to give you X amount of things,
Alex,
and
you're
so
just always diving into my next question. Oh
we
my
are in
God, yeah,
sync.
you're just, I'm telling you. So my next question to you would have been, you've answered it partly, but let me just say, how can concessions be used strategically without hurting long-term value? Because we are seeing a lot of that happening now in the market. So how do you think people should start using it without hurting the long-term value of their property?
I think right now the concessions is because, I mean, you can't really do that much because you're competing with all this extra new builds, right? I'm just give you a quick example. I just saw a new build in Houston, Texas that has 6 month free rent. They need to lease up.
Yes, I saw 4 months.
100%. If you're
Yeah.
if you're a class B or class A deal next to that deal, you are going to get hurt. 100%. People are going to move from your building to that building. It's a newer building. They you get 6 month free rent. Everyone's going to go. You can't, how are you going to compete if you go, oh, we're going to do 6 months as well? 6 months to 6 months, they're still going over there. Right. So
Mhm.
you need to just like, you need to offer more care for your people, right? The same thing that you care for your clients, your tenants are your customers, and you got to take care of your customers, right? We go above and beyond to do anything for our tenants. No matter what size our deal is, every single person matters. And that's what you also have to see as a, like, when you are in a space, every person matters. Nobody is just a number, right? A lot of
Mhm.
people see it as just, oh, that's just a number. We need to increase rents, da da da, all these things. It's all numbers and transactions. No, it's really all people and energy,
Mhm.
right? So like we have buildings around ours that are at 80% occupancy while we're at 100. How do we do that? It's because we care for every single person. We go above and beyond. They don't want to go find, even if they went and got a better deal somewhere else, they probably will not get the care that they get from our place,
Mhm.
right? So like that's number one. It's human connections, it's relationships. That is always the answer to every question.
Yeah, thank you so
Yeah.
much. So now we're going to go. I just have one more question before I ask you one takeaway that you need to drop with the audience. And the question is, we're going to go to the macroeconomy right now. You've been seeing what's happening in the US. We just recently dealt with the federal court on employment, and now we're in the tariff. So how do you think this tariff issue, do you think it's beneficial to the US, and how is it going to affect we as investors? Or do you think, no, it's bad for us and it's going to affect us in the wrong way? What's your own perception about it?
So here's the thing, right? We understanding macroeconomics is also needing to understand the motives of every party
Hmm.
and then understanding what's a smokescreen and what's actually happening, right? So, for example, there's always going to be a hostage situation, a war somewhere, something blows up, whatever happens, and then the tariff, and then COVID, and then, right? It's always going to be something. Now, like logically, let's understand what happened. First of all, COVID. 3 times the amount of money gets injected into our market. What is going to happen? There's going to be a confusion of how much my $100 is worth in my wallet. But they drag it out with all sorts of different crazy things. Finally, the market has to respond. Where is that 3x amount of money going to go? Where is it going to come from? It's going to come from all these different deals. It's going to come from the loans. Think about it from a bank's perspective. A bank borrows the money, they can now 10x that money and put it out and lend it all out. They that all the money's got to come back from where it was made. So it's going to come from equity in commercial real estate deals because for the past couple of years it shot up so high that it shouldn't have, right? So it's got to
Hmm.
come back. People got to come back to reality. If you get caught in that middle period where it was shooting up, then you're going to pay the price. But right now, as we are in this what's called a correction period, you just gotta know the cycle of real estate and of our economy goes into like it's a expansion, hyper expansion, it's oversupply, then it goes into correction. Correction, everything drops. After correction goes into recovery, right? Then it goes into expansion. Again, it just keeps going up like this, like this. You draw a line across the middle. Anything that is below that line is buy time. Anything that is above that line is sell time, right? And so when you also understand what's going on, how people react, everything in stocks, bitcoins, whatever, it's all consumer confidence. When there is uncertainty, a war is happening, tariffs happening. We don't know where the interest rates going. What Jerome Powell does with the interest rates, that does, like with the federal interest, that doesn't even affect our mortgage, right?
Oh,
It's the bonds that are bought. So people are paying attention to the wrong thing, but where do those bonds get bought? Okay, when there's uncertainty in the market, everyone's going to move their money from something that's uncertain, like stocks, Bitcoin, whatever, to something that's certain. The thing that's certain is the US Treasury bill. So that's the 10-year Treasury. The more people buy the US Treasury, the lower the interest rate comes for it. And then now that affects our mortgage. But the other thing that also affects our mortgage is the spread from the banks. So the banks now also have more say. So you got to just think about all those things coming together. What's the motives behind everybody, right? Right now they're in this period of just creating more chaos because inside chaos, trust me, you follow the money, somebody's about to make
yeah,
a whole ton of money. There's going to be
exactly.
banks that go under, there's going to be deals that go under, but it's the big taking the small. This is what always is happening in these times. Now, you got to find solutions. Solutions comes from private. Again, I'm going to just like reiterate this. During this time, private is going to be the solution, short-term solution. What we have to focus and we have to be careful of is predatory private, right? So there is even back in 2008, I heard that there was I just heard this the other day. There was a private lender that had a program basically called lend to buy or lend to take over. It's like a hostile takeover, right? We'll lend you the money knowing you're going to
And then
fail,
take
and then
over.
we're taking it. And
Mm.
that's basically like if you think about some of the things out there, I've heard people like giving 5% a month interest. Like you can't borrow that money. 5% a month is insane. Like you will fail no matter what you're doing, you're going to fail. So you have to be really careful. And then the terms that comes with it, right? There's a lot of hostile takeovers and that's going to happen as well. So you just have to be very cautious, be around the right people, be in communities like yours, right? Where people can, when you're in a community, safety lies in a community because if you have a question or you have a problem or if you need some due diligence, you ask your community. Everybody's going to be really excited to share their opinions. At least now you have a community of people giving you opinions, right? Versus you just heard it somewhere and somebody's going to take advantage of you. People can take advantage of you, but they will not be able to take advantage of an entire community. So that's really amazing and beautiful and powerful what you're creating.
Yes, you did. You did, really. Thank you so much for taking out this time. So for the audience, please, so many things are happening in the economy or in the US. Don't look at it on the surface level. There are many things going on. I can't even begin to start spelling them out. They say for every action, there's an equal and opposite reaction. So what that means is that those things you're seeing in the media, there's something at the back end going on. We can see a lot of, let me not just go into that rabbit hole because we won't leave here today. The bottom
We'll be
line
here
is
forever.
don't take whatever you see on the media as just literal. Go in depth and find out why is this person doing this, or why is this person reacting like this, or why is the government or the Congress doing this and is not doing that. So please go right ahead because the moment you're able to catch it, you'll be able to start navigating. Because if you don't know the source of your problem, how do you create solution? You can't create solutions if you don't know what the problem is. So the first way for you to do is go and find out why some things are happening. There are a lot of articles out there. There are a lot of people you can start following from today. There are a lot of people I follow. I listen to their conversation to understand why this is this. And the moment I get to listen to different conversation in a particular topic, I get to understand why some decisions are taken at the highest level. So please do that because anyhow it is, it's going to affect your investment. And for those of you that are not yet invested, it's still going to affect your money in the bank. So you should also know that it's for everyone to know exactly how to start navigating the process. So now, Alex, we're going to wrap up with this. What do you think the audience or people listening to you should take on from you today? And
Take
then after
everything,
that, how can they reach you? How can
yeah.
they start partnering with you and all that? Yep.
Everything that I have said up to this point, there is no new information. Deep
Mm-hmm.
inside each one of us, we can recognize truth when we hear it. Like in these times today, is our in times of challenge and in times of struggle is an amazing opportunity. Number one, to deepen our faith and deepen our connection with God or divine or whatever you want to call it. You know, this is a great time. Number two, what you can learn from this market and the things that are happening now will change your life forever. Because next time this cycle comes around again, you would know. I always say, if you knew that a Ferrari on the side of the road was worth $500,000 and you can buy it for $60,000 and you can buy as many as you want. If you knew
I
that tomorrow you can sell it for 350, how much money would you raise? Where would you go? The whole conversation of needing to learn is gone. You don't need to learn the capital raise because you know with absolute certainty that you're going to make $300,000 each one of those cars the next day. You would probably raise at least $6 million to buy as many as you can, right? Knowing the returns. Like all that blockage of how do I capital raise is out the door. So if you learn what you want to do is take today and what's going on in the market and get yourself to that place of absolute certainty when you are investing and when you are doing things that capital raising becomes so natural, right? Because you're so confident. People will invest in your confidence and people will invest in your enthusiasm. So to take away from all of this is like trust yourself, deepen your relationship with God, because at the end of the day, all of this stuff happening is in divine intervention. It's in divine timing. It is not really up to us. We can say it's the tariffs, you can say it's this and that. It's really not. All right, there
Mm-hmm.
is something else that is at play that is much, much larger. And
Mm-hmm.
you are meant to experience what you're experiencing and hear what you're meant to hear so that you can deepen your relationship to faith and trust. So that's my
I
takeaway.
think, thank you so much. I think I remember something you made on a webinar that I attended. You said, multifamily deepens your relationship with God. I'm paraphrasing, but that was the essence of what you said. And that is the
I've,
fact, because I won't lie to
yeah.
you, I became closer to God the moment I started syndicating. That was
Mhm.
what drew me closer to God. And I will not lie to you, that has been the source and the help. I spend more time praying than even doing any other.
That's that's it. That, I think
Really,
I think what
that
I
is
said
it.
was when you're in this multifamily or when you're in this syndication game long enough, you're gonna find God. Because you're gonna pray. You're gonna pray so many times, like, oh my God, like, oh
Help
please,
me.
like I will be such a good steward of the gift that you've given me if we just get this going. So
Exactly. Exactly.
yeah,
I've prayed that prayer
it's
like
so funny you
multiple
heard that.
times.
Love
Multiple
it.
times, yeah. So how can people reach you?
Instagram is any social media platform is the best. Alex Lovely on anything. If you want to be a part of anything that I do a lot of free webinars and things like that. Also, I have something called Stages, where kind of like what you're doing, I interview other experts. My journey now is not to give people more information, but it's to give people access. Access to
Mm-hmm.
my people, access to deals, access to funds, access to more different rooms that you can be in, and especially for teens and kids are, foster kids and at-risk youth. Like we have a huge program for that. So yeah, partner with like Ray Lewis and a couple other big players to really help
What's the
on
age range for the kids? For is it any age for the
like
kids program?
13, 12 to 18. I think at any of those ages they can become entrepreneurs or at least change their minds. Yeah, so I
Mm-hmm.
do a lot of a live personal breakthrough events as well. So Legends Breakthrough is another one you can find. But if you go to alexlovely.com, you can find all the different things that I'm up to.
Yeah, so guys, go to alexlovely.com and get everything that Alex does and start engaging, because multifamily is really more about who you know or who knows you and all that. So networking is very key in the entire process. Thank you so much, Alex, for taking out the time to speak with us. And again, once again, audience, without you, we'll not be able to do this. And for those of you that are watching us on Facebook, thank you so much for taking out time to be with us. And if you've not subscribed, I will say it again. All these conversations we are having, they are somewhere. If you've not subscribed to our YouTube channel, please go right ahead and subscribe to BB Ofuri on YouTube. You'll see everything that you need to hear. On YouTube, for those of you that were not here when I said it earlier on YouTube is just BB Ofuri. On LinkedIn is BB Ofuri. On Instagram is blue_MF group. And also on Instagram, I'm also BB_Ofuri. So you can also find me there as well. On Facebook is official BB Ofuri, and we have a group, Blue Ocean Multifamily Group. And this is where all the conversation starts, because the more knowledge you have, the more you can be able to navigate your way. Thank you all and have a wonderful day. And thank you so
Thank you
much,
so
Alex,
much.
taking out the time to. I really enjoyed my conversation with you, truth be told. And it was just so real and everything. I enjoyed it. Thank you so much for your time. And thank you all. See you on our next, it's going to be in 2 weeks. Look out for our flyer to know what we'll be discussing in our next episode. Sorry, guys, I've been very lazy to invite people. So if I'm not able to invite, you'll see my face again. Thank you all
All
for
right.
your time.
Thank you so much.